and welcome to Generate a Living Trading Institutional Moves. I only trade the New York trading session open, only 2 hours and done. And I actually run a trading room from 9 o'clock to 12 o'clock Eastern time, and I will show you some of the results that we have achieved throughout this year. Before we begin, let me remind you that trading involves a high level of risk, may not be suitable for all investors because you could lose money. So before starting to trade, you should carefully consider your objectives, your level of experience, and definitely your risk appetite. For those of you that are here for the very first time and do not know who I am, my name is Anka Metcalf, and I am the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the futures and the equities markets. I have been a professional independent trader for the last 17 years, and I have been trading my own account since then. I specialize in trading stocks and futures, and I swing trade stocks and I day trade futures, and especially the high velocity moves is something that I specialize in. And that is at the beginning of the New York trading session. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking. And I'm the designer of an institutional proprietary trading system that is based on price support resistance, but wait, there's more than meets the eye. I'm focusing on the 8 layers of price support and resistance. And I look for confluence areas that are prone to institutional buying or institutional selling. The system is designed by myself, and the reason for that is, hey, I cannot take credit for it. The reality is that I had to adapt the system for my own retail account, and I have developed the system primarily for myself. When I started professionally trading my own account 17 years ago. Now, Trade Out Loud was born back in 2010, and this year we're celebrating our 10th year anniversary. And I have developed a system not only to help myself, but to help traders achieve consistency and profitability. I have developed specific trigger times throughout the day. So if you have taken trades, sometimes you found the perfect setup, you initiated the trade, and then all of a sudden the trade failed. And you're wondering, why? Because it had that perfect entry, it had that perfect lineup. Well, news flash, you were not in the market tempo. So the market has a certain tempo, and there are specific trigger times throughout the New York trading session that are prone to institutional triggers or washes. Also, specific price zones. There are 4 specific price zones where institutions are scaling in or are scaling out of the trades. And these are proprietary for Trade Out Loud, and we teach them in our class. It is the only place where you will find them, and not unless you have been trading institutionally, you will not have access to these levels. I also look at chart synchronicity and divergency, and this is huge for trading because this points out what you need to be trading on a specific day. There are a lot of traders that say, hey, I'm only going to trade the mini S&P, or I'm only going to trade, let's say, Russell. Listen, you're not a market maker. So because you're not a market maker, you need to take trades and you need to initiate trades in very specific symbols, in very specific indices. The index that has really the capacity to move throughout that day. For instance, right off the open, before the market even opened, we had relative strength in NASDAQ stocks. Because I do come from stock trading background, I pay very close attention to a lot of stocks, and I do stock market analysis before I trade futures. So it's a very complex ritual that I do, but it helps me identify which index will be in play this day. And today I've noticed 2 elements. Number 1, NASDAQ stocks were leading. And because I'm a swing trader, I had positions in my swing trades that rotated very early on, right in the first 30 minutes of trading. That gave me the information that I should be trading NASDAQ and not Russell on a day like today. So this just to give you a little bit of idea of how synchronicity and divergency works. Also, speaking about divergency, today, and especially off the morning, we pretty much had an all balanced out market. The market was declined from the overnight trading session, and they were pretty much lined up into within the same percentages, gain or losses. Losses in particular for today. So what that means is that we had a pretty blank canvas when we started the day. Right from the open, we had a rush in the first 30 minutes into NASDAQ. We had a blast into the S&P. We had a blast in Russell, and then we had a blast in Russell as well. Shortly after, the market started to stabilize and started to sift. NASDAQ continued its trajectory higher because it continued on its path of least resistance. We did have some trouble areas into the Dow because the Dow was actually captured, and we're going to circle back to this when we're going to look at some charts a little bit later. So Russell had a huge resistance zone. The resistance zone that it had was basically last week's low, and including the first half of the week low, which also marked the quarterly high. So that is a really big area for the Dow. Now, you might say, what does the quarterly chart have to do with day trading? Because you have to make an assessment throughout all the time frames to see what is the index that has the highest velocity, that may have the highest velocity move. I also apply a strict set of trading rules and a 10-point scoring system that enables myself and my traders to identify trades with ease. And it is my pleasure to announce everyone that, first of all, TradeOutLoud has been around for 10 years with extraordinary performance, and we are a performance-driven company. We put our money where our mouth is. So not only that, we offer education, but we back it and we help traders achieve consistency by delivering trading ideas and trades every single day, whether swing trades or day trades. So TradeOutLoud was nominated for outstanding performance and the best financial literacy tool with Benzinga Global FinTech Awards. So just for your information, this is a global event. So we are the best from the best in the world. If you guys want to learn more about TradeOutLoud, you can head on to our website. It's TradeOutLoud.com. And by the way, our website is 10 years old. So there are going to be some changes that are being made on our website. But please have some patience. If it's downloading a little slower, keep in mind it's just an old website. And we're going to have a brand new website in about a month or so. If you want to follow us on social media, you can follow the handle TradeOutLoud on Facebook, on Twitter, on YouTube, or LinkedIn. And on Twitter, I'm more active with my traders. We almost have 9,000 followers, and I do post real-time ideas. For instance, if you're a stock trader, I highlighted a pattern that we identified in Netflix very early on this morning, and you could have gotten long on that specific swing. And we do have a plethora of trading ideas that we post each Sunday, so you can choose of your liking, and you could actually run with those ideas. I trade from home an income-producing style of trading. Why is it an income-producing style of trading? Well, because I'm in and out in the same day. I do not hold positions overnight in my day trading account. I do have a separate swing trade account if definitely I decide to trade in that account. And that is for wealth generation. That is definitely where your money is locked for, let's say, 2 days to 5 days, or even sometimes even for 2 weeks or 2 months, depends on the market activity. If you have been trading, I don't know, maybe 2015 or 2016, that was a range-bound year. And positions were actually held in those swing trading accounts for a very long time. Sometimes it lasted for 6 months or 8 months or even 9 months because that range continued for about a year. And as you recall, the breakout happened right after election. I trade with the institutional money flow. So we do not follow the institutional money. We actually get in at the same time with the institutional money flow. So we don't need to follow their footprints. We are making the footprints into the market alongside institutional traders. We trade and we focus the high velocity moves for high rewards. I don't get out of bed if I know that I'm going to come into the market and make 10 points in YM or 2 points into the mini S&P. It's not worth my time. So you have to learn how to do all this work so you can have a solid method that you could trade your whole entire life. I day trade from 9:30 to 11:30 a.m. because this is an overlap of the London session with the New York trading session. At 11:30, the London session closes, and depending on how the London session closes, then you can see further on if there is accumulation or dump into that 11:30. Sometimes the institutional traders accumulate, and that is a very strong sign that the trading is going to be very powerful for the afternoon trading session. I focused on 2 hours and done because there's a lot that goes into trading. So my trading day does not really start at 9:30 when the market opens. I do about an hour and a half research before the market opens, and I collect all my intel. I collect everything that is happening into the stock market, whether it is downgrades or upgrades. I take a look at the Qs and the SPYs activity at the SPX and the COM. I look at the Dow and the Russell. I look at this the overall stocks. I look through the Dow stock, primarily the leaders from each and every single index. So I go through Boeing, I go through, let's say, Disney, Walmart, and UNH, Home Depot, etc. And I also go through NASDAQ stocks. So I do have screens, actually, that where I watch chart patterns. Okay, so it's not only that I go through lists, I have the real estate. I have a computer where I can have screens where I get a glimpse and I know exactly if there's a setup or not. So if you have a watch list, and this is a little bit outside of our topic today, but if you have a watch list for stocks, that is not going to serve you any good because you need to watch the list displayed in charts, and that is when you're getting all your information from. So like I said earlier, I only focus on 4 charts, and that is the 4 indices that I trade. I trade the mini Dow, the mini S&P and NASDAQ, and Russell. I also trade oil and other commodities like gold and silver and natural gas and platinum and softs and cocoa and whatever it is. You can even trade currencies or currency pairs via futures, but those specifically are for swing trading. I deploy specific and precise strategies at precise times and precise locations based on the guidelines that I have. I apply simplified management because what happens if you have a trade without management? Well, you can turn a winner into a loser if you don't know how to properly manage it. A lot of times traders get themselves out of the trade way too early. And why do you think this is? Because they lack a proper management system. You need a management system that will tell you exactly what you need to do when you achieve target 1, when you achieve target 2, when you achieve target 3. What is the price? What is your behavior? What are you going to do so you're going to trade stress-free? So these are certain behaviors that you need to know and certain elements that you need to understand in order to trade comfortably. Traders take themselves out of the trade because they have no idea what trailing is about and they don't have a system. So with trading, you have an unlimited income potential, and what a fantastic market. I have been trading actively for over 20 years. I've been on the investing side, the swing trading side, the day trading side of stocks, the day trading side of futures for the last 8 years or more. And I have never seen a market that is this hot and that is this phenomenal as the market that we have right now and that we're trading right now. In 2020, the market that we had in 2019, the market that we had from 2006 through 2016. So in particular, these last 4 days have been day trading and swing trading paradise for traders. I have seen accounts that have quadrupled in a year, and this is the norm, because if you know what you're doing, you should definitely double the account. This is like taking candy from a baby. Look at this market, guys. It's parabolic, and it has some really great volatility into it. If you have been trading like I have for the last 20 years, and especially since 2016, it was a very stale market. If you would have a move in the S&P that was 5 points or 7 points, OMG, and you would have to be in the trade most of the day in order to achieve that. So I trade basically part-time for full-time profits. So I trade in the morning for about 3 hours from 9 o'clock to 12 o'clock. And then for the rest of the day, I spend about 10 minutes to put in my swing trades for stocks or commodities. That's how much time I spend in the market. So trading is awesome. It really is awesome. If you know and learn how to trade, there's no other, it's not even a job. It's a lifestyle. It is definitely not a job and not a hobby. It's something that, it's a skill that if learned, it's gonna last forever, and it's just gonna get better and better and better. And trading is fun. I was on Twitter yesterday, so I had a presentation yesterday from 1 o'clock till 2:30 or so. And during the presentation, I had my charts on. Obviously, the market is closed right now, and I'm not really that distracted. I'm not as distracted as I was yesterday. And I was watching the market, and the market yesterday had some news, and it came slashing down, and I'm like, OMG, I wish I just was not in this webinar right now, and I would be trading. Because right after I wrapped up the webinar, I went to Twitter and I highlighted the fact that there was a certain setup that was developing. So the trigger was not yet there. So the price did not trigger yet, but it was developing. So I always love to alert traders before it happens, not shoulda, coulda, woulda. It's like, hey, here's an example from the past, right? Here is where you should have gotten in. This is where you should have put your stop. And this is where you should have exited the trade. And this is where you should have had your profits, okay? So basically, this is after the fact, okay? I'm always about show me the money now in real time, or show me what's happening now, or what is likely to happen, because everybody is an expert after the fact. So trading is fun. I have 2 offices. One is in Boca Raton. This is the layout. This is where the magic happens, in Boca Raton, Florida office. And in here, you can see that I have 5 screens. In this office that I am right now in Michigan, in Detroit, Michigan, and actually I'm about 26 miles north of Detroit, Michigan. I have 4 screens. But you can see here, this is my command center. And I was showing you, and I was telling you guys that I have the watch lists, right? This is what a watch list looks like. Okay, this is what a watch list looks like. And this is how I determine my entries. This is how I determine my stops. This is how I determine everything. So this is the watch list. I don't have it on a piece of paper, and I don't have it in a, let's say, quote unquote, watch list, where you have all the symbols and all the prices and the net changes and everything on your on your market watch. No, you have it through charts. These are some of the screens that I have here for stocks, and definitely I have about 4 or 5 of these, but they're minimized. So I switch and I flip through them. I have 2 or 3 for the Dow stocks. I have two of them for NASDAQ stocks. I have some Russell stocks, and I have a plethora of stocks that I have on watch, and this provides me with a really good glimpse of what's happening under the hood of these indices. And of course, I have here my active screen, which is right in front of me, because I trade on this dome. So this is where I place my order. So I need to have this right in front of me. So here's the thing, guys. In trading, there is no average. No average. The reality is that in trading, there is no gray line. I mean, in marketing, you could be like, okay, or you could be like, you can transition through a job, but in trading, you have to be great in order to make money, or you're a loser. So you're either fantastic and making money, or you're not making money. I'm sorry, it's blunt, but this is the way trading is. It's a merciless uh, skill that if you do not know how to handle, guess what? It's not going to work for you. And I hear a lot of traders saying, because I do run also a trading room, I provide education, and I also have a trading room, and we also have a swing service. There are a lot of traders that come to me and say, hey, I want to come in the trading room and I want to kind of learn how it's done. And after I make a little bit of money, I want to learn how to trade and I want to buy the course. This is like me saying, hey, I want to operate on your brain right now. If I'm really good and if I really am successful of what I'm doing, then I'm going to go to medicine school. It's exactly what trading is all about. So you can't learn how to trade. I mean, you can learn how to trade, but it's going to take you probably like 10 years, okay, by simply trading. So you don't go, so think about this. You go to medical school, you get out of medical school, you have to do your residency program, and then you start, and then you start, doing surgeries and whatever. Trading is the same. You don't start trading and then you postpone your education process. So let's talk about charts. So I was saying before that I only watch the 4 indices, but I also watch oil, which is here on the right-hand side. I have the symbol covered, and this is gold. But this is the Dow, this is the E-mini S&P, this is the E-mini NASDAQ, and this right here that is covered is Little Russell. So it's really hard to miss a trade when you focus on 4 indices, because based on how the stocks are pushing or pulling under these index, then you're going to have velocity in one of the indices. And yesterday we had massive divergence. Yesterday was a very hard day to trade. And in fact, when I opened, the first trade that I took in the morning was a trade in the Dow that was a small loss. And then we had 2 more trades, one in the Dow and one in NASDAQ, that made money and took us out of the hole and put us into positivity. I'm going to show you some stats later on. So basically what we're saying, and I'm going to answer all of your questions at the end of the presentation. So I am seeing the questions, so definitely will address all of them. So basically when you're looking at the market, you're looking to identify patterns, and your obligation as a trader is to only trade identifiable patterns. If you don't have a pattern, you don't trade, and you have to have patience for that pattern to develop. There is no such thing. And it is incomprehensible how some traders say, hey, I don't have patience, I just get into trades. No, you don't have the education. And the patience comes from education. You're not educated. So because you're not educated, you're just tapping into trading, you're just buying left and right, and for the hell of it, you're just saying, hey, you know what, let's see, I'm gonna just risk $500, see if it goes, it goes, if it doesn't, it doesn't. And oftentimes traders try on small amounts, which no position sizing or no criteria, no entry criteria, and you're wondering why they're blowing their accounts. Trading is exact science. Trading is mathematical precision in determining entries, stops, targets, and of course management. More so is how to put everything together. The reason why I was drawn to the futures market was because I was trading the stock market for many years. And I still love the stock market, but I'm not day trading the stock market anymore. And I'm going to share with you why. First of all, when I was trading the stock market, I would trade all day long. So I quit my job 17 years ago and I decided to day trade my own accounts. Now, here's the thing. I was not a day trader when I started day trading. I came from the investing field and the swing trading field. So I dove directly into day trading. Of course, I have the proper education and the training to do that. Other than that, I did not even, perceive to get into trading, right? So I knew exactly what I was doing. I did my due diligence. I took a massive amount of courses and education. I had mentoring. I was very fortunate to have top-notch trading from institutional traders, from some really, really, really big institutions in New York, where I spent most of the time, at least in the first 2 years of my day trading career. And I was very lucky that I was not allowed to actually blow an account because I had the guidance. I was trained for consistency. I was trained to identify winning patterns. And it was very hard for me to take stupid trades and to make stupid mistakes. Sometimes you make mistakes like, hey, I forgot to put in, let's say, instead of taking 1,000 shares, I took 10,000 shares. So yeah, that happened to me. Or in futures, instead of 5 contracts, I took it like with 7 contracts. So there are certain kinds of mistakes that you will still continue to do because in a fast-paced market environment, these are things that may be overlooked when the environment is super fast. But because I came from the stock day trading background and I was trading all day, there was one common denominator. I don't know how many stock day traders are here, but I love day trading stocks. But for tax purposes, and if you grow your account, and when you're going to reach that stage, you're going to try to find ways where you're not going to pay so many taxes. So one way to do that is to navigate towards the futures market. So here's the thing. What is the one common denominator for a stock trader, for a stock day trader? Before actually diving into scanning for stocks, you're actually going to look at what? The market internals. You're going to look at the Qs, the SPYs, the diamonds, right? You're going to look at the futures indices to see how they performed overnight. And then you're going to form your analysis, your relative strength, your relative weakness analysis. And then you're going to start building your list. Then you're going to stocks and building your list for the strongest stocks and for the weakest stocks. So you know that in a strong market environment, you're going to start trading very strong stocks because they have high odds of continuation, higher. Just like an example, like with Microsoft, right? You have Qs in Microsoft. You're going to choose the stock like Microsoft. You're not going to choose Xilinx that didn't do anything today, that had relative weakness. You're going to choose a stock like AMD. You're going to choose something like Netflix or Google or Apple, right? So you're going to choose stocks that are outperforming the specific ETF because they're going to run faster, higher. And this is what you want. You want instant gratification in a trade. That's what I'm looking for in the futures indices. So I'm looking for that instant gratification when I'm in and out with high velocity move with the maximum amount of points that I can get out of the market. In a weak market environment, you have to pay attention to whatever is weak. So right now, because the market is screaming higher, I would not go ahead and say, oh, I'm going to scan for shorts and I'm going to start shorting. Right? You're not going to have a very high follow through. In fact, you're most likely going to be stopped out. So these are very simple, basic rules that you apply in the stock market and, of course, into the futures market. But that was that one common denominator that I wanted to simplify my life, and I didn't want to sit in front of the computer all day long. So I wanted to, pretty much trade something that is not going to be something that is effortless, something that doesn't necessarily imply a lot of scanning, right? Because it's not easy to come up with the bullish list and with the bearish list. I mean, that's a lot of work. And I would work for about 2.5 hours before the market opened. Now I only work about 30 minutes before the market opens because when I collect my intel, and I only have to look at very few things other than that I mentioned before. So these are the things that made me switch to the futures market. The fact that I was watching the market ETFs, the Qs, the SPYs, the diamonds, and all of a sudden came to me, it's like, hey, why don't I just trade the Qs and the SPYs? I was trading commodities at the time. I was trading gold and bonds, etc., via futures because they are more potent and you can make way more money trading futures than trading stocks. And I'm going to share with you exactly how to do that today. And basically, I was like, okay, so then from for about a month, I think I was only trading Qs and the SPYs, and I was like loving it. And then it hit me. It's like, hey, wait a minute. Why don't I just switch and day trade the futures, the futures, Nasdaq, S&P, and the Dow? So that's what I did, and I never looked back since. So here are some of the advantages of trading futures. Number one, you could take a short position on with ease. There's no uptick rule. So what that is basically is when you're trading and when you're into your day trading process and when you're scanning, through your stocks, you're finding a stock that you want to take. And if you want to short it, you're neglecting to see at the top of the chart whether it says, it's hard to borrow or easy to borrow or whatever the fact is. And then you try to hit the sell button. Oh, you cannot short that, okay? So you can take a short position with these. And of course, the other thing is there's no uptick rule. You have reliable volume. You're trading the major market indices because you're trading a very, very big market, huge market. You're trading the Nasdaq, you're trading the SPX, you're trading Russell, and you're trading the Dow. You're trading an income producing style of trading via day trading and wealth generation via swing trading and active investing. You have different tick values and price ranges depending on your account size and depending on your definitely your comfort level. You have the Dow, which one point is equivalent to $5. You have the mini S&P where one point is $50. You have Nasdaq where one point is $20, and you have Russell where one point is $50. You also have micros available that we're going to circle back. So you have minis and micros available. And you also have, for instance, for the gold market or the silver market, you have minis and micros available. The minis, for instance, are 1/10 of the size of the full-size contract, and the micros are 1/10 of the size of the full-size contract, and the minis are half the size. You also have half the size available for the gold contract. So full-size contract in oil is pretty hefty, but you could trade it with half the size if you select to do the minis. You don't need a scanner. I do use a scanner because I do have to have an assistant, and that is my personal AI, if you will, that is selecting the stocks and is generating trading ideas for me, but that comes with a cost, and it's not cheap, and you have to really know how to use it. You don't need any special indicators when you're trading the futures market. And in fact, you don't need any special indicators regardless of any market that you're trading. So don't waste your time with indicators. You have a lot of tax advantages. And this is the number one reason why I came into the futures market. And I'm having my income producing style and method, and I'm generating my profits, my income profits through day trading. It's safe from rumors. There's no pump and dump. There's no manipulation, no downgrades, no upgrades, and it is a 24-hour hands-on risk. So what do I mean by that? Well, the stock market closes at 4 o'clock. You don't have control over the market until the next day. So that means that if you're having certain events that are happening in the overnight trading session and the market is closed in the morning, the stocks are either going to gap up or gap down. Where in the futures market, you have full 24-hour control. So if you want to adjust the stop or add to your position or even initiate a position at 9 o'clock or 3 o'clock in the morning or at 10 o'clock at night or 6 o'clock in the morning, you can do that. So it offers you maximum flexibility. One of the other reasons many traders gravitate towards futures trading is the relatively low startup cost. So, for example, usually requires about $30,000 to open a stock day trading account. And you must maintain at least $25,000 to keep your day trading status. Because if you lose a penny, poof, your day trading status is out the door. The futures market allows you to open an account for as little as $5,000. And best of all, you do not have to maintain that amount. As long as you have sufficient cash in your account to cover the margin requirements to trade the index or commodity, you could actually have a balance of $700 to $800 in your account and still trade futures and definitely trade the commodity or trade micros in that particular instance. So I'm going to share with you right now a chart that is going to blow your mind. So I just want to know how many stock day traders are here in the room. Just type a 1 in the room right now if you're a stock trader, if you have never traded futures in your life. And then at the end of the presentation, I'm going to ask you, if you're not convinced to switch to day trading futures, I want to know why. All right, so post it here in the room. Just type a 1. How many stock day traders are here tonight into the room? How many of you guys day trade stocks here in the room? Type a 1. Type a 1. Okay, nobody here day trade stocks? Wow, that's surprising. Okay, Richie, Walter. Okay, so very few of you guys. So you guys are all futures? Type a 2 for futures. Okay, I see some hands up. Okay, I see some hands up. Okay, gotcha. Okay, guys, be prepared to be mind blown, just like I was. And remember, I'm coming from financial background, and it just hit me about 8 years ago that I could totally simplify my life in a huge way. So here are the advantages. Let's say hypothetically a trader wants to day trade the Qs, right? That, let's say now they're priced at $280. The trader needs about $14,000 in buying power to buy 100 shares. Agreed? And if the price goes up 50 cents, you're going to make 50 bucks in it because each cent is equivalent to $1. Now, if a day trader wants to trade the E-mini NASDAQ, which today is priced at $11,496, the trader needs about $17,000 to buy one contract, and that is the buying power, okay? That is the buying power because of the 2020 pandemic volatility. Every time there is volatility in the market, you're always going to receive an email from your broker saying that the margin requirement to trade that commodity or index has increased. Do you guys remember when oil was trading in negative numbers? The margin requirement for that commodity is usually about $3,000 to $5,000. It was $30,000 because they didn't want traders involved in that crazy hawkish price market. So if the price goes up 50 points in NASDAQ, and today NASDAQ is up about 149 points, so if the price goes up 50 points, you're going to profit $1,000 because each point is about $20. All right, are you ready to be blown away? Yesterday, I did this example, and I took in my account using that $14,000 to purchase 100 shares long. So like I said, I focused on high velocity moves, and all our trades in yesterday's trading session were longs, just as today. So you can see right here, yesterday, this is the time when I took the snapshot at 10:30, and the trade was originated yesterday. The trade entered at 10 o'clock. 10 o'clock represents one of the best reversal times in the market. And if that is matched with pattern and pattern recognition, then boom, you have an extraordinary trade on your hands with a high velocity move. Take a look at this high velocity move right here. The target was actually into these highs right here. So you can see 278.32 is where the price was trading at the time, and we closed the trade right here. But I took this trade with 100 shares to show you that I was at the trade for about 20 minutes. 20 minutes is when the trade triggered here, where my arrow is, into this high. So it was a perfect 15-minute rotation that happened off the lows from a confluence zone into an uptrend. It was perfect. So the trade, I was in the trade for about 20 minutes. This is my work day, about 20 minutes. And I took it with 73 shares. So again, the buying power for this was about 14,000. And the profit in it, $73, which is not bad because I was only using 73 shares. Do you guys agree? Okay. Now, let me share with you a little bit over $14,000 because this is for market volatility. So this is with a buying power of $17,000. And I only took this trade with one contract. You don't need to put on a lot of size when you're trading with, when you're trading futures. So basically here you can see that I entered the trade at 10 o'clock based on the same rotation, okay? Based on the same rotation. So I entered the trade at 10 o'clock. The trade duration was 20 minutes, the same as for the Qs, and with one contract, okay? The result was $600. So the buying power used here was $17,000 because of the volatility. Usually when the volatility is going to subside, the margin requirement is going to go down. And it's going to be less than purchasing 100 shares. But we're still trading. And I believe that this year, it's going to be all about volatility. And we're going to be all about volatility until next year as well. We have election that is coming up. We have the fourth quarter that is coming up. We're still dealing with the pandemic. We're still dealing with businesses that may be lost forever. And so we have a lot of things that we need to sort out into the near future. So again, the trade duration is 20 minutes and the buying power is pretty much similar. So I'm going to ask you right now, would you rather trade the futures? Would you rather trade futures and make $600 using the same buying power, or would you rather make $73? So this is almost 10%, not really, I would say 9%, but this is an amazing gain right here. You can see at $73 trading the Qs or $600 trading futures NASDAQ. The advantages of trading comes from the fact that depending on your account size, you could use full-size contract and you could also use micros. Bigger accounts are obviously going to trade with full-size contracts. Smaller accounts can participate with small accounts. I do not do option futures. I do not like to trade options, so I don't trade options altogether. That's not my thing. I love to have market participation in it, so I have no desire to trade options, and especially in futures. Sometimes once in a blue moon, I do. If I do options, I do it in stocks, and if I do options, I do options in Amazon or Google because they're very high priced, and I want to minimize my risk. But in the futures, no need to do options, zero interest, and no need to do options. And micros are a great advantage for the futures trader. Why? Because small accounts can participate. It's better than paper trading. It's great for scaling in and out of trades, especially for swing trading. And they're 10th of the size, right? So consider this: if you have a very wide stop, you can position size way better using micros. I have a trader in my that took the class about 3 months ago, and he's obviously trading with me in the trading room, which is a guided trading room. So I do all the work. All you have to be is like brain dead, but all you have to do is move your finger on the mouse. And basically, this trader is making an average of $8,000 to $9,000 a month trading micros. Okay, trading micros. He doesn't have a big account. He trades about a $20,000 account, but he chooses to trade micros because of the volatility. And volatility creates these wide risk levels, and therefore position sizing is fantastic if you're using micros. Why I use the first 2 hours? Well, that is the sweet spot. The sweet spot is the overlap of the London session with the New York trading session, and that is designed to be the most volatile part of the day, and this is where I profit from. So if you're thinking, okay, what should I be trading the futures market or should I be trading the stock market? Well, for me, I love swing trading, so I'm always going to swing trade the stock market. But futures market, think about it. It's only 24 hours a day. You have no excuse. If you have a full-time job, you can day trade any time of the day. I trade in the first 2 hours because this is what I like to trade. But I teach traders how to trade the 24-hour cycle. If you want to trade the London session or the Asian session, we do provide education for that. So the futures market is a 24-hour market, and it's open 6 days a week. The stock market is open 5 days a week. It's open from 9:30 to 4 p.m. Eastern. Stock trades, geopolitical events do not wait for the market to open. Events just happen. So many markets that affect the U.S. markets trade outside of the U.S. market hours. So if you're having an event that is happening overnight and you want to take advantage of it, or you want to take your position off the table, guess what? You can do that because you have control over the market. But in the stock market, you have to wait until the market opens the next day. So I day trade the first 2 hours and I day trade. I profit from the most volatile part of the day and trade only these high velocity moves with very high odds. If I have the pattern, if I have everything lined up, I take the trade. I'm extremely disciplined and extremely patient. And the odds are 75% or up. I get in and out fast on these high momentums. And it is my income producing style of trading. So if you're going to ask yourself, hey, is trading easy, or is it easy to succeed in trading? Well, hard work does not guarantee that you're going to get up there. In fact, 90% of the traders don't get up there because even though they put in really hard work, and I know some traders that have really put in some really hard work, and finally, after 15 years of spinning their wheels, they came to me, they took the course, and they said, oh my God, I did not know that this is going to be so easy. Yeah, because trading is not rocket science. It's just a set of rules that you need to know. And these are the institutional way, this is the institutional way of trading. So after, a lot of time spinning your wheels in the market, a lot of traders just give up. They either lose their capital or they're really tired and they say, hey, trading doesn't work. Doesn't work for them. It's like there's something that is missing, of course, because trading, even though it's simple, you need to know how to follow the rules and you need to be really highly educated. You really need to know what you're doing because remember, there's no gray lines in trading. You're either awesome or you're losing money. There's no gray line. There's no such thing as like, oh, I'm going to try it here. I'm going to try. It's going to work or it's going to not. It's going to work or once or twice, but 20 times after that, it's not going to work. But you can become educated. And the more you understand that trading is a system, and it's not only about strategies, it's not only about entries or stops, it's not only about management or mindset, it's not only about experience that you have experience. I know a lot of traders that come to me and say, hey, but I do have market experience. I've been trading for 10 years, but I'm not yet profitable. Well, what are you doing? You can't be trading 10 years and not be profitable. You have to change something. So if trading was easy as, let's say, buying a book from Amazon or buying 20 books or 50 books from Amazon, listen, guys, you're never going to learn how to trade from a book or from a DVD. You need to have real market experience. You need to have solid education that is backed by practice in the market with someone trading, copying someone that knows exactly what is doing in the market. And learning winning patterns, because trading is visual. So once you identify a pattern that speaks to you and has a certain setup, take a picture of that, stick it on the wall in front of your computer. And then the next time around, when you're going to have a similar pattern in the market, you're going to go like, aha, this is the pattern. So I'm going to take this pattern long or short, depending on what it is. There is no shortcut with indicators. I have a lot of traders that come to me and say, hey, I found this indicator, this and that and that. Listen, everybody that is going to try indicator is going to delay their learning process. Mark my words. How many of you guys in here have successfully used an indicator? Just type a 3 in the room. Like literally, you're going to wait for an arrow up or down or a dot or whatever it is, but literally it's not an institutional way of trading. Do you think that there's an institutional trader out there right now at Goldman Sachs that is in front of his computer right now and surfing, oh, I gotta find this new indicator that is gonna simplify my life because I'm really bored and I just wanna automate my trading. So do you think that they do that and they buy it with 20 bucks or 50 bucks or 500 bucks or whatever the price is and say, hey, PM, here's the new indicator that you're going to be using for the multi-billion-dollar portfolio that we manage? No, that's never going to happen. And trading is about candlestick and price action. This is what trading is all about, and support resistance. This is what trading is all about. So open your eyes, ditch the indicators and everything that overcomplicates your existence, and look at the charts. Just look at the price action. The clue is into price action. In fact, price action, past price action, is your crystal ball. It's going to tell you exactly what the price is likely to do in the future. And this is how institutional trading is done. Do you think that they're using any sophisticated indicators? No, they're not. So why futures? First of all, it's an income producing style of method you can trade from home. How fortunate are we that during the pandemic, we were right here in the house and we were trading our own personal accounts and we were thriving while other individuals guess what? They were actually looking for their stimulus checks and they were crying because they did not have a job and they still don't have a job. I know a lot of individuals that still do not have a job and that breaks your heart. Okay, so the time to learn is now because you have no idea what's going to happen. Listen, I started educating individuals back in 2008. And this is when pretty much, that Trade Out Loud concept worked and came about 2 years later after I did like tons of pro bono and I trained and educated for free a lot of traders within 2 years and a lot of my friends, because they were losing their shirts in the market. They were losing their IRA accounts because of the market financial crisis in 2008. And I was providing them with education and trading ideas, et cetera, et cetera. I was doing lunch and learnings and everything for free. You have unlimited income potential when it comes to trading if you learn how it's done. You can trade any market on the planet. It's a recession and depression proof skill. You have control over your time and money. So can anyone make money in the market? Yes, an astute trader, an educated trader is always going to make money in the market. No education is simple. No education, no money, because no education, no patience. So you're not ever going to know what you're going to be doing in the market. So listen, trading may not be for everyone and trading is not for everyone. In trading, you have to have tons of discipline and patience. So learning how to trade is not inexpensive. And you're one way or another, you're going to pay the market and donate to the market massively if you don't know what you're doing. It's going to be like a Harvard education. You're going to blow account after account after account, and still there's no guarantee that you're going to make it. So it can be a good chunk of change, but think about the losses and the mistakes that you've done. And these losses and mistakes you're never going to repeat. So how much money have you made this year from trading? Have that one-on-one discussion with yourself in front of your account and say, hey, here's my account. Right now it's August 20th, 2020. How's my account looking at right now? Where was my account in January 1st, 2020? And where's my account now? If it's down, there's no excuse why your account should be down right now. Your account should be thriving right now. In our program, we made over $109,000 in profit trading only 2 hours a day between 1 or 2 trades a day, 1 to 2 trades, sometimes 3 trades a day, rarely, with only one contract, trading one contract at a time. Oh, one contract, that's it. Over $109,000. These are the results, and these are our win ratios right here. At the bottom, this is the result per contract. So all these trades that you see here, this is all my hard work. This is all my hard work. So you can see the result at the bottom of the page and the results you realize per contract. This is the win ratio, 82.22% for the month of January. February, things started getting shaky with COVID. Over $10,000, 86.67% win ratio. March, 91.84 win ratio. And this was the best month ever, by the way. 26,777. We had traders that quadrupled their accounts in March trading with me. I spoon feed all the trades to my traders and my students, spoon feed them, because I want them to earn while they learn. In April, 70%, over 70% batting average, over $16,000. In May, 81% win ratio, 9,800. June, 66% batting average, 4,625. In July, 82% win ratio, close to $13,000 last month. How about August? August is not done yet. We still have about 1 week to go. And right now, we have all positive trades all days. Here, only one loss. So this whole entire month of August, hello, only one little baby loss. And guess what? On this day, on the 19th, yesterday, we took 3 trades. So we had the first loss, $250, and then we made $50 and another $280. So bam, we were out of the hole. So we teach and trade live every single day a highly successful algorithmic system that follows institutional money flow in the first 2 hours and enables us to profit from momentum moves at specific times, locations, and precise technical patterns. Our method overrides news events, any artificial indicator, earnings, dark pools, everything. So it's trading hard to learn. Well, it can be overwhelming at first because it's just like driving. You have to keep track of your gas, your brakes, your mirrors so you don't crash. But once you get used to it all you have to worry about is setting your destination, and trading becomes a second nature. Like now, when you get into your car, guys, do you like really have your checklist and say, hey, seatbelt, check, mirror, check, rear view mirror, check, right? No, okay? Same thing with trading. Your entry is your gas pedal. Your stop is your brake. Your market condition is your roll conditions, right? And your take profit or your stop out. So once you get used to it all, it becomes instinctive. So wouldn't it be helpful to have someone that can teach you everything and also make the money for you? Well, we teach a class. It's the Power Income Futures Trading course. We have been teaching this class for over 5 years now. It's an institutional grade trading system. You learn how to trade stress-free, so there's no such thing as sweating or crying in trading. You're going to learn to stack profits like never before. You're going to learn precise buy and sell zones, management and risk management, Hyatt's patterns and setups, and how and where to place stops, because hey, you have to learn how to place really good stops so you don't get stopped out of trades as often. But stops are part of the process. But you saw that I have very few stops. It's very hard for an educated trader to have losses in the market. In fact, you saw that. It's really hard for me to lose money in the market. And best of all, we teach you how to put the puzzle together, because this is what trading is all about. So we do teach the Power Income Futures Day Trading course. It's a 5-day master class where we teach you how to take advantage of the 24-hour futures market. Not only that, you're going to learn how to trade indices, but you're going to learn how to trade energies, metals, commodities, bonds, etc., and forex futures, etc. But not only that, but you're going to learn how to day trade the stock market using the same principles as for the futures market. We teach you the most powerful day trading chart patterns and how to exploit them for above average gains. We teach the 6 major disciplines of every trade: the entry, the stop, the target, the risk management, trade management, position sizing, and trailing. We teach you market tempo, multi-time frame alignment, which is a must if you know, and if you are a day trader. Remember, I started the presentation mentioning that the Dow is right now having support into a quarterly high. So you're taking information from all your time frames and transferring them into your smaller time frames. That's the 1 minute, the 2 minute, the 5 minute, because that's the day trading zip code. We're going to teach you how to maximize your timing using key moving averages and other powerful free indicators, just moving averages, volume, etc. We're going to teach you market timing, the precise timing, when to act, when to buy, when to sell, when to sit on your hands, precise locations. Remember, there are 4 institutional locations where institutions are hopping in. I'm going to teach you how to identify algos to get in with algos at the same time. Advanced technical analysis. You won't need another course or class. We teach you the advanced management and advanced technical analysis skills, which is more powerful than 20 books that are out there. So this course comes with unlimited free live retakes every single month. Repetition is key. You want to make it in the market, come to the repeat classes. You get the on-demand recordings for the classes, and they're yours to download, and you can even watch them without having an internet connection. This course starts Monday. It is the Get Ready to Trade September, October, and the end of the year. If you have not made money until now, now's the time. The course is from 2 to 4. It's a 5-day online course. It's $4,995. Learn more about it at TradeOutLoud.com/futures. You could actually have, we're actually having a huge bonus with this course. And it actually ends, it says there 2 p.m. It's actually going to be tonight at midnight. So it's 12, actually a.m. Eastern. So with the purchase of the Power Income Futures Day Trading course, you're going to receive the Futures Swing Trading course for free, the recording from the course. And that is a course that we sell for $4,995. So you're not going to pay extra for this. So you just pay the $4,995. You're getting this for free. And you're getting a total of 3 months in the trading room. Imagine being 3 months in the trading room and stacking profits. And in the first month, you could pay off for the course, like easily, like handheld system. So remember, the deadline is tonight. So thanks so much, David. David has posted the link there. It's TradeOutLoud.com. Take advantage of the special offer. This is not going to come here soon. And it's not going to come here actually forever. We're not going to do this deal forever, but we have done some really special deals during this pandemic because we want to make sure that people have options and they know how amazing it is to trade and make money staying from sitting at home. Thanks so much, David.
All right.